Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex Daily Video Research, and today is the 29th of October, and I think that we should take a look at the Japanese yen. We have talked previously about this currency a long time ago, and now there are some interesting moments on this pair that I think that is worth it to discuss in the video research. Besides, we have talked much about the euro currency, about Great British Pound, Australian dollar, so there is nothing really new on these currencies. Let's shift to the Japanese yen. As you remember, the major pattern that is forming currently on the weekly and monthly time frame is the ABCD pattern with the target around 78.40. And when the Bank of Japan has shown this intervention right here and didn't allow prices to break below 82.50 roughly area, some of you guys asking me, well, Sive, do you really believe that Bank of Japan will allow the prices, will allow the rate to move lower, even to the 80 sharp, or even 78.50, like you expect? And the guys on the CNBC told that Bank of Japan has marked the level that he will intend to protect. And will not allow to Japanese yen become even stronger, so blah blah blah, etc etc. In general, we should follow our trading plan, despite the news, despite the television, despite the to tell the wise guys on the CNBC. And the trading plan suggests that this pattern is very harmonic. I have cloned the AB leg and shifted it to the CD move, and we can see that these legs have the same speed. It's very harmonic, and as I told before, many traders call this pattern like an ABCD buy. When this retracement to the downside is very harmonic, at least market should bounce from this area. Also take a note that this area 78.40 roughly is below the previous lows of 1995. You can look at these lows on the monthly chart itself. This is the weekly chart of the Japanese yen. Currently weekly trend is bearish, so I suppose that market should reach this area. If market will not intend to reverse to the upside from this area, it should bounce a bit at least from this level, and you can imagine that the bouncing a bit on the weekly or monthly time frame, this will be the very not small move. On the daily time frame, or even for intraday trading, it can give us the context for the trading during the whole month or even longer. Okay, this is my view on the longer time frame of Japanese yen. Now let's take a look at daily time frame. This we can see the intervention day, and market totally erased this strong bar and has taken out the lows just of this strong move. This is very bearish sign. Now you can see that we have excellent thrust to the downside. This is green line is the 3x3 moving average. We have close above the 3x3, close below. Yes, this is the good context for the possible double repo bottom pattern. And as we discussed yesterday on the Australian dollar, the minimum target of the double repo from this ABC bottom, 100% expansion around 82. Well, that's not a small move, even if you enter on the confirmed signal when the market will close above the 3x3. Okay, so although this bar has not been closed yet, and this target can shift lower if market will show a bit close a bit lower than current low. So, but general idea is clear. Well, or even market can show even deeper move. Also, this target agrees with the 50% retracement for this recent reaction high, from this high to this low, 50% retracement, 50% Fibonacci resistance area. Okay. Now, if you would like to anticipate the double ripple pattern, how it can be done? First of all, we should wait for a close of current wick. Then we can calculate the pivot points for the coming week. And in the beginning of the week, if market will show closing above the weekly pivot point, we can try to enter on the long side to get the better risk-reward ratio before market will show the confirmation of the double repo. I just want to remind you the confirmed double repo is forming when the market closed above the 3x3. When it will happen, then it will mean that double repo has been confirmed, and we can try to enter on the long side. But anticipation of the double repo involves in this process the pivot points. If market will show the close above the weekly pivot point at the beginning of the next week, then possibly we can try to enter on the long side, but this is more dangerous than enter on the confirmed double repo, because the anticipation of the double repo, this is the directional pattern, is a bit tricky, because market can may not show the confirmation of the double repo and continuation move to the downside, because our long-term target on the weekly and monthly time frame hasn't been reached yet. So this will be just a retracement in the long-term move on the weekly time frame, and I think that this retracement can be somewhere around 82 roughly area.